Testing. Oh man, it doesn't work. Wah, wah, wah. Huh, I just can't get my new mic to work. Boo! Have to use this other stupid mic. But good morning. Good to see you. Just trying to get this stupid mic to work. All right, let me put some whiskey in my coffee and we'll get going. Why won't it work? Yeah. All right, well, at least I got this stupid mic. Go! Dang it! Now, well, I feel lucky that I got one mic working. Because it would be amazing, right? Or not amazing. It'd be horrible if I couldn't get any mics to work. So I feel very blessed and happy. Wait, no. Now you don't have any sound. What the heck just happened? Now we got to go back to this. There, you know what I was babbling about? The fact that at least I got one mic working, and I should feel lucky. And then none of the mics worked. All right, so anyways, welcome everybody. Sorry for the delay. I bought fancy mics because I want you to have amazing sound. And of course, nothing works. But anyways, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Because trading is risky. Not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah, so you're probably saying, well, a couple of days ago the sound is better than now. Yeah, I would imagine that to be true because this is my webcam. For some reason, it'll only pick up my webcam. Not the $200 mic, not the $300 mic, not the $400 mic, or not the $500 mic. Jeez, criminy. Anyways, enough of that. So we're doing what we can, and the intent is to get the sound amazing. But thank you for being here. Thank you for the patience and discipline you're showing. Huh? Got it? Is it good today? Huh? So, anyways, what do you think? Up? Yeah, look at that. Cool. Anyways. What are we going to do today? Are you guys risk on or risk off or neutral? Let's not do a poll. Just type it in. Tippity type, tippity tap, 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 like squirrels in the attic. Wow, a little bit of a delay, huh? Looks like YouTube is delayed by a good 30 seconds. Ooh, my. Ooh, my. Cool. How do you determine whether you should be risk on, risk off, or neutral? How do you figure that out? So we looked at this earlier today using two methods. Okay, one is in risk analysis. Okay, that's one way. Another way is we looked at sentiment. Okay, for the stock market. Okay, so euro dollar neutral, Nvidia neutral, Amazon neutral, right? Google neutral, Apple neutral, so on and so forth. Tesla neutral. Be cool if it had everything in the world, which, yeah. You guys know wheel? So I'm on this team here. Okay, we've been nominated for 2 prestigious awards, Best New Equity ETF. And that's our actual product, and then this is the actual company, the issuer. Peerless ETFs issued Wheel. So I will be going to New York City next month to pick up these awards and congratulate everyone that came in 2nd, 3rd, 4th, and 5th place for, for the nomination. So I have envisioned in my brain. But anyway, so at some point, the reason I got involved with this group is I like what they do. I like this product. I like the strategy from the very beginning. I only know one option strategy, and it turns out, right, it turns out the only option strategy I know turns out to be wheel, the wheel strategy. It's been around a long time. Probably over here in my bookcase, I probably have 4 books on the wheel strategy. I don't know any other strategy. And then one day, after studying the wheel strategy for about a year, one day they reach out to me on LinkedIn. It's just serendipity. And they're like, hey, we'd like to talk to you. I'm like, no. Actually, I didn't even respond. We got another, a couple of months go by, another ping on LinkedIn. No response. And then pings me again on the 3rd time. He's like, I run a wheel strategy. I run an ETF called Wheel. Wait, what? We're the only wheel strategy available in the stock market or in the ETF wrapper. We're the only wheel ETF, and our symbol is wheel. And I'm like, but that's the only option strategy I know, and I love it. You're kidding me. Like, what? So I'm like, oh my God, I got to help you guys. Because it's part of what I try to do with endowments. So I'm like, oh my God, love it. So anyways, here's the data, and we have a dividend coming up in 10 days, roughly. I don't know, 2 weeks, I guess. So anyways, pretty cool. But based on the last dividend payment, the annualized distribution rate, so now you take the dividend and you annualize it. Now, right? at that level over all 4 dividends throughout a year, what does that add up to per year? You know, of course, it talks about all this stuff, right? But you can Google it. But anyways, I think it's fair to say 14% is what it's paying on an annualized basis in dividends. How many people here know compound interest? Anyone good at math? If your account is growing at 7% a year and you're reinvesting the dividends, how long until the account doubles at 7%? Does anybody know? I'm going to have you do the math because I'm not going to promise you anything. This is not a sales pitch, by the way. We'll get back to it. But we were talking about money, and this is real. This is on the New York Stock Exchange, right? But let's see who's good with the mathy stuff. Compound interest. 7% annual compounding. How many years until you double? All right, Jim's not that good at compound interest. Yeah, there's actually a basic rule of thumb. I'm not laughing at you, I'm laughing with you. You nailed the TED spread, Jim. Nailed it. How much does you need, let's say, 300,000 to get going, and then about 300,000 a year? Would be, I think, about right. Mike is right, 10 years. That's the rule of thumb. So reverse it. If you're growing at 10% per year, compounding, how many years until you double? There you go, the rule of sevens. Thank you. I have to wait because there's quite a delay on YouTube. Come on, YouTube. Yeah, so now if you're growing at 10%, I guess I can say it. If there's a delay, I'll say it now, and you're typing 30 seconds in the future, and then 30 seconds from now you'll answer it, but I've already said it. So why don't I do that? It should be 7 years. 10%, I think, is 7 years, right? So what's 14 or 15%? All of a sudden you're like, oh, that's pretty significant. Yeah, so again, I'm not going to tell you, there's no promise, there's no guarantee. I have no idea of the performance of this fund in the future. I would hope the dividends stay the same, but hope's not a strategy. I don't know. I know we try hard. So I don't know anything yet. But we are just doing basic math. And then you can come to whatever conclusion you want. Do your own due diligence. Okay? But Eric's been in the business for, 30-something years with a background in compliance. And Rob works on nuclear power plants as an engineer. He likes to talk math and smart stuff. Dude, cool crew, man. So anyways, yeah, there we are. All right, so we have an interesting test today. The test is this line. We've been here for a while, and we have a Fed meeting tomorrow. So all of that makes sense. Yeah, music says, congratulations, we have 10 million. Yeah, well, I'd like a lot more than that. Just getting warmed up, right? Hoo-ha! A bad man. Hoo-ha! Okay. So anyways, test one, We are going to be tested here if you're a bull. This is the stock market, so I'm always a bull. Now, that doesn't mean it can't fall, but I'm looking at it from a bullish point of view always. So we are on the S&P 500. This template, for some reason, doesn't have... Let's change the template. There, a little better. Now you can see what it is. Okay, so we're on a daily chart, S&P 500. All right, cool. By definition, this is bearish. Okay. Oh, yeah. Okay, but I'm long right here. Okay. Green means up, by the way. So this whole zone, to me, means maybe up. This little zone means maybe up. I'm a bull, so I'm looking for confluences of maybe ups. And you can see 2 standard deviations plus implied volatility allowed me to think about maybe up. And so I'm long right here. Great. In fact, I'll move the stop. All right. So now I can't lose some money. Okay, great. But it's bearish. How do I know it's bearish? That's one. Okay, we're making lower lows, not higher highs. So that's 2. And we're below the 2155. So it's like a cloud. So there's 3 reasons, technically, why we're bearish. But I'm long. What are the reasons for being long if it's bearish? 1, okay, my bias, I buy the stock market. 2, seasonality. So I'm front running what I believe will be upward move based on seasonality. 3, sentiment. Okay, what do I mean by that? Well, we have sort of technical, and I guess we'll call it fundamental. Let's break this down. Technical and fundamental neutrality in sentiment. Okay, when you look at, okay, the VIX, gold, dollar, okay, yields, both long and short term, so the rates market. What else? You look at yen. What am I missing? So we long-term bonds, short-term bonds, volatility. Oh, and stocks. Okay? And I might even be missing one. But if you look at these things, both yesterday and this week, so the last 7 days, not this week, over the last 7 days, we're actually based on what's actually happening in these markets. So it's not sentiment, how you feel, but how traders are trading. So I'll call that like technical, like the relative change in these markets over the 7 days, they're neutral as a group. But then when you read articles being written about these markets, which I'll call more fundamental, they're also neutral. Okay? Opinions and positioning. And if it's being bearish, but I'm a bull, that neutrality is part of a cycle, isn't it? And I did business cycles earlier today, and this is similar. We're here. Oh, and I'm a bull, so let me do my long-term opinion. Not GDP. I did this earlier today, so it looks the same. It's different. I think green, okay, I think it'll go up, but I understand we've been falling based on this and everything else, lower lows and all that kind of stuff, moving averages, okay? But at some point, I have to believe, if I'm a bull, that we'll come out of this and back up. And neutrality means we probably have gone this far down and we're approaching the trough. Maybe we're troughing. And maybe the future is going to be more like this. It's not what is happening now. That is not happening now. That is not happening now at all. But it might in the future. You see the process? That's why I'm long. Well, hell's bells. Okay, so what happens now if it remains bearish? Oh, well, this moving average in the future will be lower. So somewhere between where we are now and where this is now, okay, we will stop the green candles if this is going to be bearish. So whether it's here, let's do this in a different color. Okay, so whether it's here, 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 or here, if you're a bear, that's where it's going to fall. Somewhere in that gap. I'll even raise the gap slightly. Okay, and we're looking at it, okay, through this lens. Okay, that's where bears will live. Because if I was going to sell it, that's where I would sell it. Do you see this? Yeah. Yep. So between where we are right now and up there, I think there are bears. That's my opinion. So if there are, and we are going to continue our journey down, I'm going to get knocked out at break even. Yeah, I know. Cool. I knew that then. So, what if, though, the seasonality and other process is correct? Okay, and neutrality turns to risk on, sentiment turns to risk on, articles being written about the stock market are favorable. Right now they're neutral. People don't know. But what if things turn? And March, April, May, June are all pretty decent months. What will happen here in the next 2 or 3 weeks? Well, I would assume, okay, this. Are there bears there? Yes, I already told you. I think there are bears there. But I also think or hope at the very least, based on my fundamental analysis, that up is in the near future. But there's still bears there. They disagree with me. So they are going to do something about it. It's a risk to me, but it's an opportunity for them. It's a threat to me, but it's an opportunity for them. They will take it. Otherwise, they're terrible bears. So it'll come down, and guess what? More people agree with me than them. If I'm going to make money, that has to happen. Okay? Then we get above, and we take out all the bear stops. And that ends up looking like this. It's not necessarily bulls buying. And this is sort of like, when you fully understand what I'm about to share with you, and then change your behavior, which is the harder part, you'll have a turning point in your career. This move is not bulls buying. This move is bears getting stopped out at break even or a loss. A lot of amateurs believe that that's bulls buying, and that's where they start buying. Well, bulls want to buy low. Now, this is a dangerous trade. That's true. It is. It's a bit involved, as Brian says. But, it's not stupid. It's dangerous. I got it. This is a better one. But you have to be ready, willing, and able, and be able to understand the context of that higher low and its importance, fundamentally. And so 1 and 2 are the prices in which bulls should be buying. This could be your second or third trade adding in. But usually what's happening is the big move is taking the bears out. Okay? And a lot of bulls wait, and they miss 30 to 50% of the move. And also, without fundamental bias, you may be on the wrong side of the trade. The thing is, I don't know what the right side of the trade is. I don't know what the future is. So selling here might be the smartest thing. Well, if that does happen, and 2 doesn't set up, and then I get taken out at break even, okay? So that's kind of like 3, because it could double bottom and then go up, so I have to be ready for that. But if it's instead 4 lower low, well, I definitely stop buying, and I walk away, and it changes things. Because then I'm like, ooh, what happened to seasonality? What's going on? What's different now than what, I guess what I could say is, ooh, something unusual is happening. And that's good information to have. See, it's not about being right. It's about knowing when you're wrong. In my book, I talk about taking pride in your losses. It's not about how good your trades are. Every trade you take should be good. You should never have bad trades, ever. So every trade you take should be good. Well thought out technically and fundamentally. You understand the market. You can read a chart and understand the market. You can look at things fundamentally and understand the market. You can look at the data on sentiment, understand things. Every trade you take is smart. And that's my whole book, by the way, right? Remember, Smart Plan? But not always will it be profitable. But every trade will be well thought out. Sun Tzu said, an honorable general is victorious because many plans were made. You need to have every trade you make well thought out. You know exactly what you intend to do, and you can articulate why. Then you take the trade and you understand technical analysis. So you're just confirming your fundamentals through technical analysis. And you probably won't do that bad. But every once in a while, you'll just be wrong, or the market just changes. Things change. But your ability to recognize things change is 10 times more important than you entering good trades. Because all your trades are good. Even your losers are good trades. That's why you take pride in them. You got out of your loss before it was a kick in the teeth. You're like, oh, dang it, this thing collapsed on me. Oh, I had it. I thought I had it. Oh, my gosh. Oh, but it came down and knocked me out. Oh, shoot. Every trade is good. There's no excuse for a piss poor trade. So if every trade is good, then the difference between good and great is smaller losses or less, less clumsy. I guess if once in a while it creeps in there, less of a clumsy trade. But it's really keeping your losses small and spending most of your time planning. So, like, for example, let's do this quickly. I can give myself a rule. I'm only a bull on the S&P 500. Doesn't mean I don't recognize down. And we recognize the technicals. Seasonally, this was supposed to fall. Like, oh my God, I talked about this, right? We talked about this in January and in February, and we talked about the drop again in March, and now it's happened. But also, back in January, not only did I talk about the market having a significant pullback, but sort of this April, May, June, well, let's just say somewhere between March and April. Am I 1 month off? I guess I'm 1 month off, huh? Yeah, I'm 1 month off. Sorry. Okay. Well, okay, 12/12, okay, was the day I said at least 6 months in advance to look for profit taking. Now, if that's a bunch of BS, call me on it. But I'm pretty sure at least 6 months in advance, you knew that I intended for profit taking on December 12th. Not the 11th, not the 10th, not the 8th, not the 14th, not the 31st, not the 24th, 12/12. So if that's BS, call it. If it's truth, then that's that. Okay? Then, somewhere between January and March, a big down. To what degree? And at what rate? Oh, I don't know that. I don't know Is it going to come down 10% or 5% or 40%? Oh, I don't know that. How hot is it going to be in this summer? I don't know, but it's usually hot in the summer. Is it going to be hotter than usual? I don't know, but I don't think it'll be cold. It's not going to snow in July in the United States of America. Well, unless you're in Alaska, right? It's not going to snow in Hawaii in July, but it's probably going to be hot. Well, how hot is hot? Is it 80 or is it 110? I don't know. If you want 110, try Tempe, Arizona. Scottsdale's nice. Is it going to be 110? Probably. Is it going to be, although that's quite hot. Will it be 100? Yeah, almost certainly. Will it be 80? I doubt it. Will it be 140? Probably not. And when will it start getting hot? May? Maybe. June? Yeah. July? For sure. But I don't know, right? So I don't know a lot, but I know a lot. I don't know a lot, but I know a lot. I don't know everything. Okay? Cool. So down is anticipated. So if you anticipated down, and we talked about it here and here and here and here and here, that you would protect yourself, you would do something about it because you anticipated. Cool. Now the next part of it is somewhere in this period. Actually, let me do it. Delete. Okay? Not in the beginning of March, but somewhere in the middle to the end of March, and the middle of April. So somewhere in this circle. Up. Okay? And I said that, well, I knew it in December. I knew it in January. I knew it in October. Okay? I knew it here. Yep. And I will be ready to do it again next year because it's seasonality. You have to have the tools to see it, but cool. So that's why this. Will it do this next? Well, that's what the chart says. That's what the chart says. So will that happen? Yeah, there's a high probability of that. That's why my stop is at break even. But I didn't do this the week before or the week before because it's too early. In Saskatchewan, you do not plant wheat in March. Late April is a big maybe. But March is too early. So it's just like, not yet, not yet, not yet. So the window, let me do the square, was middle, okay, this is last week, right? Middle of March to middle of April. I call it a window. Somewhere in that window of time, I'd like to plant the seeds. Sowing the seeds of love. So I'm in my window. So what if it comes up and knocks me out here? And then it comes up and does this. I'm going to try again. And what if it takes me out again? And then it comes up and does this. I'm going to try again. All right, so if that's when I sow my seeds, when do I reap my harvest? Let's talk the future now. Sowing the seeds of money, seeds of money. Huh? How long do we grow this profit? And when do we harvest? Okay? This will be head high by July. If I'm not out on Canada Day then Canada Day is the day I get out. And Canada Day is July 1st. Brian already knows this because this is what we talk about all the time at traders.com. Yeah. So I intend, if market conditions can be confirmed with technical analysis, I intend to buy the S&P 500, and at the very least, as a trader, so this would be a position trade, really it'd be a series of swing trades, that I'll swing trade long between now and July. And if I was a trader, I would go on vacation and I'd be out of the market. I'd go to cash so I could spend it less on the S&P 500 and more on margaritas. Top shelf, baby! Cadillac, Cadillac, long and dark, shiny and black. Yeah, give me that top shelf Cadillac margarita. I'll be out. As an investor, and really with the S&P 500, I'm an investor. I have positions I intend to hold for decades. So that would be like, this would be a time of year I would plant the seed, and I would never get out. And there's another time in the year where I'd plant. So there, I could break this down where twice a year I invest. Yeah. Now you could be more of a trader, but if I was an investor, that would be part of my thought process. Now, the wheel ETF, we do weeklies. Swing traders. We're really swing traders if you think about it. Swing traders, yeah. With sort of a carry built in, right? So like if you're a carry trader, every day you collect a swap. And your intention is to sit on that and collect swap. The pips don't really matter in carry trading. It's all about the swap. A lot of, so anyways, with the wheel ETF, it's all about premium. Collecting, it's like interest almost, right? It's like a carry trade where you collect interest. Well, you can do something, it's kind of remotely similar, not really, but, right? We collect some income, like a swap is an income. And we don't intend to make money on the value of our stock going up. It'll always go up and down, but not by much. Maybe 19, maybe 21, then back to 19, and then maybe 21, and then maybe 19, and then maybe 21. So like the value is just kind of always kind of flattish within a normal range. And that just has to do with the mechanics of the strategy, the mechanics of running an ETF, the mechanics of issuing dividends, because we take all that swap, if you will, that carry, which is actually option premium, and then we give it to you. That's how you get to that 14.44. Oh, so it's kind of like swing trading with a carry. Weekly swing trading with a carry. That's kind of neat. Like, you can see why I love it. I'm like, oh my God, that's killer. It is killer in my opinion. Yeah. So anyways, this is a bias. I'm only long in my thought, but I understand from a bearish point of view where the bears are, and that helps me anticipate my risk. Oh, knowing when you're wrong. If you don't know what a bear will do, then how do you know you're at resistance? You're just guessing. So knowing how to trade means you know both sides of the market. Okay? You need to understand both sides of the market if you're going to master your art. Right? I learned how to swing trade in San Francisco in the 1990s, and my dance instructor was transgender. Not uncommon in San Francisco. Totally normal. And the beauty was that she could dance from the male side and the female side. Perfect! The perfect dance instructor is transgender. Think of being a trader now and having the benefit of understanding the bulls and the bears. You understand both sides of the trade. Doesn't mean you swing both ways like a broken gate. I'm a bull, but I know what the bears are going to do before the bears have even done it. Is that helpful? Dude, isn't that what trading is about? If you don't know what the bears are going to do, then how do you even know you're a bull? Okay? So anyways, it's all about having a strong opinion about precisely what you intend to do and why, but then having weak conviction. If this keeps falling, I don't keep buying. That would be conviction. I'm a bull and I'm going to buy no matter what. Whoa, 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 whoa. I never said that. I said I'm a bull and I use technical analysis to confirm market conditions for my bullish trade. If I'm a bull, I buy at support or I buy at higher lows. And you're like, well, Wayne, that's not very good support. Oh, really? Like, Wayne, that's a bearish target on a weekly. Like, there's no, I mean, that's a counter trend trade. Oh, yeah, it is. But you're like, that's not very good support. And he didn't do it the week before, and he didn't do it the week before, and he didn't do it the week before. You're like, dude, Wayne, like, that's luck. How the heck would you know that that's hardcore support? All right, it's true. That isn't the reason. But remember the window. I have absolute intention to start being a bull somewhere in that window of time. So how did I get permission to buy it if I'm not a bull? Or if I'm a bull, but it's not at hardcore support? Because that, by definition, probably isn't hardcore support. Oh, well, you're looking at it from the wrong point of view. Let's change the point of view. Okay, somewhere in the window of time, there's my drawing tool, somewhere in the window of time, I'll do it in pink again, we said somewhere between here and then somewhere to the right, over these weeks. Okay, so it looks like I bought it around the 12th or 13th. So the middle of March to the middle of April, I'm looking for key levels of support or price action or patterns, so we have pattern recognition tools to help with this, that allow me to be a bull even though I understand this is still technically bearish. This, nearly to the day, is the annual central pivot point. I have permission based on my trading strategy. If I'm a bull, I can buy at the central pivot point only in scenarios in which price has come down to the central pivot point, and then I can go long. I can't do it if we're going up to the central pivot. I cannot buy SAM-IM. But if we're coming down, I have permission to engage. And it kind of looks, okay, like kind of like a double bottom, inverse head and shoulders in my window of time at my price. Oh, oh, that's just killer awesome. I love it. I love trading. So on the way down, you're like, yeah, that's a pretty good price for the S&P 500. What's the next price, smarty pants? Oh, well, yeah, if it fell down to 52.73. So let's do this. I'm wrong on my timing. Doesn't mean, see, I don't know when I do it. I don't know if I'm wrong. So let's do a situation where I'm wrong. This trade doesn't work out. We know, as I already drew, that we're approaching a zone in which this could drop. My next support, and we would likely hit this in my window of opportunity, my area of opportunity, my AO. Okay? So let's do the window again. So this, all the way. Okay. The next one is 52.73. So if we drop down towards there, but not lower, but down towards there, or maybe even that precise. So it could be 55.5. It could be 55. It could be 54. It could be 53, but it can't be 52. My intent, and I could argue why with passion. If it does fall, first of all, I won't lose money on this first trade. I intend to use technical analysis to confirm that, something like that. And I would assume at some point, because if I didn't assume this, I wouldn't do the trade up until July. If I'm an investor, up forever. Certainly in the next 4 years. And then we'll have a new government. And, I don't know who that would be and what kind of government and what their policies are, so I can't predict that much farther. So for the next 4 years, I can anticipate what the Trump administration would do in policy and procedure, and then I can anticipate how that would impact the economy, things like growth and inflation and jobs. And then I can anticipate the appropriate monetary policy by the central bank. Okay, cool. Beyond that, it's very difficult. Now you'd just be guessing, right? Beyond that, I would just use long-term averages. So I'm like, I don't know, the S&P 500 goes up, 8%. 12 years from now, it'll be up on average 8%. Could be negative 10, but it might be plus 30. So 8, So anyway, and if I'm wrong, the nice thing about having a plan, if I'm wrong, what happens? I get stopped up. I lose a little bit of money. Cry me a river, cry me a river. Oh. You don't have to say anything. I'm already out. I cut my losses short. Hey, I just made that up. That's how you plan a trade, y'all. Did you click the thumbs up button? I'm going to teach you how to fish. Cool. What about oil? Same, only different. Okay, if I were a bull and I were to marry. Okay. Cool. What do you think about price action? Are you a bull? Oh, you don't know if you're a bull? That's your problem. Oh, you're like, no, Wayne, I'm a bear. Oh, great, wonderful. You'll get your turn. I wouldn't sell that on looking at just this chart. Now, do I have pivots? No. Am I looking at long-term moving averages? No. But if I was just doing this chart, it would be a crime against humanity for you to sell this. Okay? In particular, your humanity. Cool. Cool. Neat, right? So what's the next move? Should be up. Okay. Now, I had this planned out at the very least January 1st. January 1st is my date of birth. I got to the party and I did the Smurf. Yeah. So, when do I want to buy oil? January? No, not necessarily. February? No, not necessarily. What about March? Somewhere between the middle of March and middle of April. I knew that January 1st. Because again, we call it seasonality. Somewhere in the next 4 weeks, Georgia's going to get hot. I just predicted the future. Yesterday was cold. Today is going to be nice. But I predict in the next 4 weeks, Georgia's going to get hotter. And in the next 8 to 12 weeks, we'll get really hot. See, I'm magic. I can see the future. Well, actually, I just have past data. I just have data. Yeah, you got to have good data. We run a tight ship here at the McDonald Mansion. And by we, I mean my wife. You'll say, hey, how much has your water bill gone up over the last 10 years? She'll tell you. Oh, yeah, in January 2015, our bill was this. Here it is. It's all written down and recorded. Here's how much we spent on electricity. Here's how much we spent on groceries. Here's how much we saved for retirement. This is how much we saved for our kids to go to college. Yeah, we track everything, right? And so we know how much prices have changed and how much flow, right, has changed. How much inflation do we really face? You got to have the data because then you can predict the future. Yeah. So, how do you get such wonderful toys? To quote Batman, where does he get those wonderful toys? Okay, here. So you got pages and 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 pages of fundamentals. Millions and millions of tables. Millions of tables. So we can say, okay, so what is the S&P 500? What does it typically do this time of year? Okay, let's see. Up in January, and then there's a peak, and down to March. This is what it actually did. So we opened up, and then collapsed. Oh, you mean like this? You didn't know that? Oh my gosh. You know, TRADARS is $300 a month for everything, right? So if you lost more than $300 in your net worth, it's foolish not to subscribe. Shoot, I had that planned months in advance. Cool. So what am I doing now? I'm planning this. Head high by July. Dude, you don't know this? Like, oh my God, really? Yeah. And why do I get out in July? Never mind. Like, why would you not if you felt there was a peak? Like, it's so straightforward if you have data. Now, is this actually going to happen? No, I don't know. I only got 20 years of S&P 500 data. That's all I got. I don't know that much. I don't know the future either. I don't know. Maybe something crazy happens. Who knows? The world can get a COVID 2.0, and this is all completely wrong. The S&P 500 drops 70%. Could happen, bro. Unlikely, but it could happen. So I got to know the basic rules of the game, don't I? You're playing blackjack. You have a 10 and a jack. Do you hit or do you hold? The next card is random. If you can't figure that out, then you don't know the game. So you got to know the basic rules of the game. And some understandings that the next one's probably not going to be an ace. It's probably going to be greater than an ace. And that would be bad. So that would be risky. So you're like, well, I don't want, I'm going to hold. So you got to know the game, and you got to be competitive. This is a competitive sport. This is about being an athlete. And every game is competitive. Every game needs strategy. Every game you need to know strengths and weaknesses of your team, but you need to know strengths and weaknesses of the other team, and you need to be able to execute relentlessly. Hey, this is your, hey, LeBron James, this is your 9,000th game. You're like 87 years old, but you can't cruise through this one. Okay? You score or you're fired. Same thing, like, are you doing enough to compete? Are you taking ice baths in the morning? Do you have a nutritional coach? Do you have a performance coach or shrink for your head to keep you focused and adjusted? You know I'm planning 2026? What I'm doing now is all about 2026. No joke. Right? So how do you keep that focus? How do you keep that game on mentality? It's part of the game. If you can do it, you can compete. And if you're competitive, you'll win some, maybe many. And that's every trade is a good trade. Every shot is a beautifully executed shot. Will the ball go in the net? I don't know. It's a pretty big ball in a very small net. Sometimes you get a three-pointer and you get a big win. You're better off with an alley-oop or a dunk, so you got to get in the paint sometimes, right? But the thing is, you walk onto the court and you're the strongest. You could be the greatest. You could be the best. You could be King Kong pounding on your chest. Yeah, by the way, that movie should be called The Wolf of Criminals. It's not Wall Street. That's very bad rap for Wall Street. Okay, they were criminals. So you can steal money and buy yourself a yacht and a Lambo and think good things about yourself, or you can earn it like an honorable, ethical person. For you to earn it, you're going to need to have good data, understand how to interpret it, and then have the patience and discipline to execute your trades through technical analysis. Or you can be like Jordan Belfort and just steal it from people by lying. Well, that's dumb. All right, so let's do this. So I want to be a bull on the S&P 500. Okay, great. Let's only look at the S&P 500, and let's look. I want to get rid of key levels, consecutive candles, big moves. I want to see reversal patterns or trend patterns. I'm only a bull. That's all I care about. Why? I made a fundamental decision. Now I just need to confirm, are the market conditions favorable to bulls? All right, so now I do technicals. And I like to automate it. Oops. And then I got to go to indices. And okay, this is my S&P 500. And right now, it's not up. Okay? This is the hourly, and this is the 30-minute. And these patterns show non-directional. So they're not bearish, but if they fall to the pink, then the next one will be lower, high, lower, low, and then it will become bearish. All right, well, I already got my stop at break even because I anticipate this actually happening. But the pattern itself is non-directional. But this is a threat to me. What about the 15-minute chart? No reliable, repeatable pattern. What about the 4-hour? No reliable, repeatable pattern, up or down. What about the daily? No reliable, repeatable pattern. Oh. What do you think we saw when we were back down around that annual central pivot point? Remember, these charts are not looking at that. It's not doing technical analysis, it's doing pattern recognition. So imagine you were ready, willing, and able 3 months in advance for the market to drop to 55, 55-ish, and somewhere around there you decided you would like to go long. And then, guess what? The price falls over the course of 2.5 months down to 55, 55, or whatever the number was, 55 and 00, whatever the number was, right? You get down there, and then suddenly, on the 15-minute chart and the 30 and the 60, you start seeing bullish patterns. You're a bull. You're on the annual pivot at a price that you expected to turn bullish. Do you take the shot, yes or no? Yes! Will it work? I don't know. It hasn't reversed yet. But it might. And that's why you use stop losses, because if you're wrong and the central doesn't hold, and these patterns were just short-lived patterns, because that's what a 15-minute chart is, well, you had an opportunity. It was risky. You knew it, so you probably took a smaller lot size. You threw down a trade because you had technical conditions favorable to your bias on the price that you anticipated 3 months in advance. Therefore, you took a shot and you were wrong. You lost a little bit of money. You step away and you wait for the next setup. Or you're a professional guesser. Traders don't guess, especially TRADARS with radars, because TRADARS is radars for traders. So if you're a trader with a radar, you don't guess. You align sentiment with fundamentals and technicals. And then you get yourself a performance coach so you can get lessons like this multiple times a day. Okay? Like today, at 10:45, so in 1 hour, the team is meeting with David Pegler, a trader I respect and admire. I've known David since he was knee-high to grasshopper. And he's going to cover price action. Killer. Oh my God. And then tonight at 6 p.m. tonight. Didn't know that. But Peter Ward's going to meet with the team and talk about the stock market. Oh, dang it. And then how about the London Open at 3:45 in the morning? Jessica's going to do the Open. Oh my goodness. Tomorrow at 7 a.m. I'm going to go through the fundamentals. Oh my goodness. This is great. And my week on the street's in the wrong spot. I guess I should move it to Friday and just kind of do that. I think Brian, you've locked in Fridays for crypto. Let me know if I can sneak in there and do Friday, and we do a different day for crypto. Let me know. Cool. Neat, right? So anyways, that's how we do it. Gold. Yeah, see, all of this is easy, right? Right, Lucky? All these things are easy. What, you want gold? All right. Well, that's silver. That's silver. That's silver. That's silver. That's it. Well, what about gold? I don't know. Check our settings. We're looking at Brent, oil, silver, and gold. We're looking at reversal patterns, and we're looking at trend patterns. Okay? So what about gold? Nothing. What do I think about gold? Nothing. So easy. There's no technical pattern. Not one that's reliable and repeatable. Doesn't mean it's not moving. But like, you ask me, and I ask my technical analyst. Oh, is that right, Meta? Sunday. All right, yeah, forget it then, Brian. Forget it. Yeah, no, I'll do Sunday. Yeah, that's right. Thank you, Meta. All right. Now, Lucky, would you like me to talk to my fundamental analyst, my quantitative analyst? Let me know, Lucky, if you want me to call up my quant. This is my chart analyst. I can give my quant a call. Say, hey, tell me what's up with gold. What's going on with gold, quant? Let me know. I'm going to wait for Lucky to respond. There we go. Okay, Lucky. Hey, quant. What do you think about gold? Lucky is our greatest client. And Lucky is demanding gold data now. Okay. Wow. It's loading. After that bit, we're still waiting on Google. Come on, Google! It's the Google Cloud. Come on, Google! There we go. All right. Gold. Let us get some data on gold. After looking at GDP, inflation, unemployment, interest rates, and money supply, okay, including institutional positioning and retail positioning, it's just deleted here for some reason. Yesterday we were bullish and today we're bullish. Not very bullish. We're modestly bullish with a linear projection of hitting 3,100. Okay? But lucky. What is my target for the year? 3,111. That's not on this chart. Well, this is fundamental. Well, what about this? This is a chart. No. That's statistical. Not technical. There's no pattern. We have patterns over here under technicals. It's pattern recognition, but it's not doing technical analysis. It's not giving you targets. You have to know how to do technical analysis. Cool. This is statistical analysis. This is pattern recognition. But there's no doubt when you do fundamental analysis and score everything up, we're quite bullish on gold. And the score didn't change since yesterday, so we didn't get any interesting news. So we are fundamentally bullish. We're interested in buying dips, but technically, there's no pattern right now for a bull or a bear. Huh. Well, hell's bells. Hey, Lucky, would you like me to bring in my sociologist to tell you about how the markets feel about gold? Let me know, Lucky. I had my technical analyst tell you there's nothing to do. The quant says, added up all the macroeconomic data, and, yeah, we're bullish. And maybe not today, but in general. But would you like my sociologist to tell you about society's feeling? Okay, let's do that. So now we call up our sociologist and say, tell me how the market feels about XAU. Okay. We just read 95 articles on 6 different websites. Reuters, Forex Live, FX Street, Bazinga. 95 articles in the last 7 days. This is not the score I just showed you based on fundamentals. This is the score on how the market feels about gold. And this is the not gold price, but how the market has felt about gold over the past 30 days. There was a period around the beginning of the month that we were actually negative on gold. But we were positive fundamentally, but negative on sentiment. Then we get into the new month, and it starts moving up again. Cool. Neat. Now, if you're a swing trader, you might think, okay, profit taking at the end of the month and then buying back in at the beginning of the month. And this moves sideways for another week and then it has a little drop. And then what? And then you buy it again. Is that true? I don't know. See if you can find a pattern. Was that true the month before? No. So now I'm just seeing things. Cool. Okay. Cool. 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 The market feels good. The market feels bullish on gold, and I can prove it quantitatively. And I can track it over time. So now you have a sociologist, a quant, and a technical analyst, and performance coaches, a team of performance coaches at your disposal. Yeah. Is $300 a fair price for something like this? This will convert you from an amateur trader into a small institutional trader. Bloomberg terminal is $2,200 a month. Okay. Now Emerald's like, let's do risk on assets. That's easy. All the data's there. You can pull up any asset you want. It's all there. But even if you don't have the $300, I think you would find that that's a fair price. Yeah. But what if it was cheaper than that? Oh, wait, what? Shh. Cool. So I was on the OECD earlier and found some really cool stuff. And I'm very eager to get to my development team and start asking questions about how we can integrate this new data that the OECD has. So I think I want to do that now. It's almost 10 o'clock. David Pegler's session's coming up in 45 minutes. So I think we should end for the day after an hour and a half. I guess that's enough. I hope I hit you hard on the importance of having data, and your ability to develop trade plans. I don't know if you can be a confident trader if you have no foresight for the future. Because that means you don't know, you have no idea what's going to happen today or tomorrow. You have no, really? The Fed meeting tomorrow? You have no idea? Really? You didn't know Switzerland was going to cut interest rates? Why not? Let me do that for a second. Let me show you. I got to go to this one. It's going to lock me in again. Like, you didn't know? Really? So you go to fundamentals, you go to central banks, and you're like, show me Switzerland. Okay, boom. Yeah, so they cut from 0.5 to 0.25, and now the market is debating whether they're going to do it another cut. Yeah, we already know that. We already have it plotted out. We have it all graphed out. Boom, 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 boom. Yep, it's done. It's like I don't know how people trade not knowing anything. right? The idea of Illuminati is embedded in Harvard. Its motto is Veritas, which means, your knowledge or your power from truth. Truth is knowledge. Truth is your power. What is truth? You know. You just know things. I can't predict the future, but I know a lot about what's going on technically. All the time. I can analyze 7,500 charts, and it just takes me minutes. Like a couple of minutes, 2 minutes. Okay? I have the data fundamentally. I have the data on how the market feels. I know how the market moves. It's knowledge. It's data. I can't predict the future, but I have knowledge. I have the truth. This is the truth. The data is true. This data is accurate. So I think. I can't guarantee it is. But I think it's accurate. And therefore, it becomes the truth. You see? Like, I don't know. I don't know the future. That's my job. And that's where technical analysis really comes in, because it's scientific methodology to confirm or deny your fundamental hypotheses. If you can do both of these together, cool. I think you have a chance. Now, what if you had all of this and your coaching team, and it was free, and you also got prop-style funding? Would you join? Let me say it again. What if all of this was free, and you got the coaching team, and you got prop-style funding? Would you use this tool? I hope you're going to say yes, because that's what I'm doing. This is happening. This is real. It's happening. This is how you're going to trade the rest of your life. So I can't make it free, but what if I gave you your subscription back? Yeah. Like, for example, let's say you're not ready to trade professionally yet. And you only have a small account and you're still learning. Okay? Would it be helpful if you paid $200 a month? And let's say at the end of the month, you either got $100 PayPal to you or $200 PayPal to you. Would that be helpful? So it's now either half price or free. If you're just learning and you have a small account, you're in your first year, you're not ready for the big time, it's not going to be a career move. But at least while you're learning, it becomes half price or even free. That's happening right now. Cool. Well, then this is it. This is for you. I'll let you know more in the future, but people are doing it now. It's happening. Like I said, here it is. You can get $100 back or $200 back. Cool. You just use our execution partners, so you trade with traders.com. And that's all I'm going to talk about that. Okay. Plan A has failed. Plan B is here. And there is no plan C. If you prefer scalping. Okay. Yeah. So anyways, for you guys, I want every single person here to be using TRADARS. And not only would I like it to be free, but when you are ready to actually trade a decent size account, I'd like to be able to offer prop style funding so that you can make this a career platform. Meaning that you use TRADARS every day for years and years and years to come. That you and I are on the same team. In fact, I'd like to know that you're actually making money. I'd like at least 100 people that I know are using tradars.com and they're making money. And I'm going to throw a big party. They use it and they make money through their own hard work, but they have the data. And I support them in everything they do, and they make money on the deal. Wouldn't it be great? You sign up for Traders and you make $1,000 a month. Great. How long do you want to use it? Forever. Sweet. You know, this is my vision. I hope you share it with me. It's not a sales pitch. It's a dream coming true. When we get 100 people that are using us, our service, our tools, our analytics as a career, or at least as a profitable trading, you know, $1,000 a month, I can't call a career, but you trade and act as a professional and you're making money. We're going to have a big party in some beautiful part of the world. You're going to show up. It's going to be a tax write-off because you'll probably incorporate by then because you're making money. And we all are using TRADARS together. I think we're going to do it in the Bahamas. We're going to go to this exact hotel that I know we're going to do it, and there's going to be beautiful rum, and you're going to learn how to roll your own cigar, and we're going to jump in the pool, we're going to jump into the ocean, and we're going to bring in guests from different walks of life so that we can learn about how, like, Navy SEALs handle stress. Yeah, we can have the fun stuff. We can do all the fun stuff. That's my goal. And a giant group hug. I'd like to buy a yellow Lamborghini and give it to charity. Wouldn't that be a fun end to the party? I certainly wouldn't want one. Oh my God. But that would be fun, wouldn't it? We all do selfies next to the yellow Lambo. Give it away, give it away, give it away now. Cool. So that's my vision. I want you to be part of my life forever. Cuba Libre again. Yeah. Oh, it's going to be so good. Yeah. Actually, I thought about that, Meta. One of the hotels, yeah, throwing a, Americans could go but I think most would not want to try. But for everybody else, that'd be killer. To host a conference. My worry, though, is to host a conference about capitalist pig dog stuff. How many, can you imagine the hotel staff calling the government and they're talking about investing money and making profits and living a life of glory. You got to get over here quick and shut this shit down. Yeah, like, whoa, whoa, whoa. That's him over there. That's the capitalist pig dog. Yeah. I'm like, run, Forrest, run. Yeah. Right? Remember the advice you gave me before my first trip? Keep your mouth shut. And I said, that's going to be difficult. So anyways, look, guys, this is it. I finally got the complete package. Okay? I finally built the complete package for us. Market sentiment, fundamental analysis, technical analysis, performance coaching, execution, free, and funding. I want everybody to use TRADARS and make money. It doesn't cost you anything out of pocket. You sign up and you get money sent back. Nothing out of pocket. It's a nice little wash. Meanwhile, you're using the tools properly. You have a real team. You have a real platform. You're making good decisions. You're making good, and now you make money. This is a way to make. That is my intent. No one's ever built a company like this with this kind of morality attached to it. This is 100% for you. 100%. 100% for you. This is built for you. It's for you. We have a team. You have a team. So, stay close. Amazing things are about to happen. So grab hold tight. It's going to be a wonderful ride. Peace on earth. May the pips be with you. May your profits be above average. Have the greatest day ever.